Hello, and welcome to the Essential Year-End Accounting Checklist. I'm Jim Wyatt, and in this video, I'm going to walk you through the most essential best practices for closing your books at the end of your accounting year. The end of the year in bookkeeping is generally a very hectic time. There are year-end bookkeeping and payroll considerations, W-2s, 1099s, plus the annual income tax filings, just to name a few. But with pre-planning and an organized approach, the closing of your books and the preparation of needed reports for your accountant can be much more streamlined and much less stressful. Let's begin by looking at year-end bookkeeping tasks. It's important to start our conversation by defining the time period that you can make adjustments if you find discrepancies or errors in your current year's books. If tax returns have already been filed for the previous year, then that year should be considered closed, and it should not be adjusted except by the addition of the adjusting journal entries, also referred to as AJEs, which were likely supplied by your accountant when they gave you a copy of that year's income tax return. The adjusting journal entries need to be entered before you can complete a review of your balance sheet for the current year. In addition to the AJEs provided by your accountant, there should also be an adjusted trial balance report. This report shows what the ending account balances should be after the journal entries have been made. To double check, run a trial balance report as of the date of the AJEs, usually December 31st of the prior year. Compare that report to the adjusted trial balance included with the AJEs. If they match, you can begin the current year review. It is important to be sure that all transactions have been entered for the year. We commonly do this by reconciling the bank and credit card accounts. Although all transactions are generated from these accounts, it is a best practice to do this on an ongoing basis as soon as you receive your statements. In this way, you can determine if the bank or credit card companies have made any errors in sufficient time to have them make any corrections that are necessary. You can also see if any fraudulent charges have been made. After you have reconciled your accounts through the end of the year, review all of the transactions that have not cleared. Determine if the transactions haven't cleared because it was in transit at the time of the statement. That is, a check that had not been cashed by the recipient, for example. Perhaps it was a duplicate entry or a check that will never be cashed and should no longer be posted. You can delete or void uncleared checks or deposits that are not valid if they are in the current year. However, and this is very important to note, if the invalid transaction that you wish to delete or void is in the prior year, please do not delete or void it. Instead, make a list of these transactions and send them to your accountant with an explanation as to why they should be removed from the books. In addition, please make a copy of the account statement closing on December 31st of the current year and January 31st of the following year and send them to your accountant. As an example, for closing the 2019 books, please send a copy of the 12/31/2019 and the 1/31/2020 statements to your accountant. Credit card statements are a little different because they usually don't close at the end of the month. With credit cards, please send the statement that has the activity all the way through December 31st of the current year. Please review any petty cash or cash drawer accounts you have listed in your asset accounts and let your accountant know that they have been reviewed and that the year-end balance is correct. Review your accounts payable and accounts receivable balance. This is more easily done if you run an aging report. Focus particularly on invoices or bills that are significantly past due. Just as with invalid checks or credit card transactions, you can delete or void unwanted AP and AR transactions that are in the current period. For transactions dated in a prior year, make a list with a note as to why they should be voided and give this to your accountant. They will make the needed adjustments when preparing your tax return. After review of your AR and AP accounts, print out detailed unpaid bills and open accounts receivables reports for your accountant. Review your purchase transactions during the year, especially your office supplies, tools, and repairs and maintenance accounts. Any durable goods, such as telephone systems, air conditioners, shop equipment, office furniture, etc., that is valued at $2,500 or more, should be moved from your expense accounts to your fixed asset accounts. These items need to be depreciated and become part of your asset list. If you are paying for equipment or furniture on an installment basis, send the note information to your accountant. If these purchases are for durable goods that cost less than $2,500, we recommend that you put them in a special expense account in your chart of accounts called, quote, durable goods less than $2,500, unquote. This practice will help you prepare your personal property tax report in the following spring. Review your fixed asset additions for the year and be sure that the memos on the transactions reflect the correct type of equipment, vehicle, property, etc. For large purchases, it is recommended that you provide copies of the purchase documentation to your account. If you have inventories on your balance sheet, such as finished goods, raw materials, or work in progress, you should perform a year-end physical inventory. If you are comfortable doing so, adjust the inventory balances if needed. This will usually involve the use of journal entries. So if you do not feel confident in making the adjustments, send your inventory values after the physical inventory to your accountant for revision. Review all the loan balances on your balance sheet against the year-end statements and/or the amortization schedules you have. If balances do not agree, it is likely that the payments made during the year were not split between principal and interest expense correctly. Make any needed adjustments or ask your accountant to make the adjustments. Provide sufficient detail as to the accounts in question. Regardless of who makes the adjustments, whenever possible, provide your accountant with your year-end statements that show the closing balance and the total interest paid during the year. You likely have one or more of the following income or expense accounts in your chart of accounts: miscellaneous expenses, miscellaneous income, ask my accountant, and/or suspense account. These accounts generally have transactions that you are unsure how to classify correctly. Although useful for initially placing transactions that are difficult to classify, they are accounts that tax preparers prefer to have a zero or minimal balance. As you close the year, review the transactions in these accounts and reclassify any that you are confident as to where they go. If in doubt, leave the transaction in the miscellaneous or suspense account. Leave a note in the memo field that will help your accountant classify it correctly. Transactions that you are unsure how to classify can become like the proverbial needle in the haystack when they are misclassified. As the tax preparer will have to search all accounts for accuracy if they start to notice them. It is better if they are left in just one area, like ask my accountant, for review later. One of the most important areas of the year-end closing, which requires close review before December 31st, is payroll. Review the payroll, allowing yourself sufficient time in December to issue a final payroll run that can correct any errors or make any additional bonuses, tax fringe benefits, etc. Correcting a payroll after December 31st can be very costly. One year-end payroll item frequently and mistakenly left out of payroll processing is payment of bonuses. All monetary bonuses are subject to payroll tax. If you did give out holiday or year-end bonuses in the form of cash, You still must include these in the annual employee W-2. Personal use of company vehicle. The personal use of a company-owned automobile is a taxable form of compensation that must be included in the employee's W-2. Calculating the value of that personal use can be a little complicated, but if you need assistance, you can contact us and we can help. You will need to provide us with the mileage of the personal usage, the total mile used for the year, and the make, model, and year of the vehicle. Subchapter S, Shareholder Health Insurance. For S corporations, any accident or health insurance premiums paid by the company for shareholders having over a 2% share need to be reported on that shareholder's W-2. Outstanding employee advances. The IRS does not favor employee advances or draws being held over the end of the year. Their position is that the monies have been received and should be taxed in the year received. You should attempt to have no outstanding employee advances as of December 31st. Lastly, it is also required that any gifts totaling over $25 during the year be included as taxable wages in the employee's W-2. This includes gift cards, food baskets, etc. Prior to running the annual W-2s, review your employees' addresses to be sure they are current. The W-2s are due to the employees prior to the deadline for filing them with the Social Security Administration, which is January 31st. We recommend distributing the W-2s to your employees prior to the deadline and waiting to file your W-2s with the Social Security Administration until they have had the opportunity to review their W-2s for accuracy. If they find errors, you can make your corrections internally, and because you haven't filed the copies with the government, you won't need to go through the process of filing amended W-2s. Be sure to file your W-2s with both the federal government and your state government. Not all states require you to file them at the state level because they have a share agreement with the federal government. However, Oregon does not have such an agreement, and you must file your W-2 specifically using their electronic system called iWire. Failing to do so can result in significant penalties. We recommend that you Google Oregon iWire before you preparing your W-2s to be sure that you are in compliance. If you are using QuickBooks Online with enhanced payroll, QuickBooks Online will not e-file your W-2s with Oregon. You will need to file using iWire outside of QuickBooks Online. In November or early December, you will receive your state unemployment insurance rate for the upcoming year. Update your payroll system or provide the notice to your payroll service provider before your first payroll of the next year. If updating your internal payroll system, be sure the change is not affecting the current year. Also watch for new tax rates for transit taxes, Oregon WBF taxes, etc., and update accordingly if your payroll system does not do it automatically. Have employees complete a new W-4 for the upcoming year. The IRS has significantly revised the W-4 for 2020, and Oregon recommends the completion of its own Form OR W-4 for existing employees. It is required that all new employees complete both the federal W-4 and the Oregon W-4 when hired. Jones & Roth provides guides for important payroll dates and tax rates available on its website at jrcpa.com/forms-guides. If you are using QuickBooks Desktop, your accountant will likely want a backup or an accountant's copy of your books. Any changes made to a backup copy cannot be transferred back to your active copy. So if you want fully updated books, and you supply a backup copy, you will need to stop your work until your accountant returns the revised backup to you. However, you can send an accountant's copy with a cutoff date of December 31st. They can make changes prior and up to that date while you continue working on the books after that date. When the accountant is finished with the changes, they can send back a change file that can be merged with your active books. Save a revised backup copy as an archive of that year's books. If you are using QuickBooks Online, simply add your accountant to give them access to your books. We recommend saving a general ledger detail report for the year, either in PDF or Excel format, so you have a static copy of the year since you cannot make backups when using QuickBooks Online. Password protect the closed periods of your books. This prevents someone from inadvertently changing or adding new data to a period for which the tax returns have already been prepared. When such changes are made, they require the tax preparer to find them and make adjustments before preparing the current tax return. This slows the process and adds to the costs. To password protect and close the books in QuickBooks Online, from the gear icon, choose Account and Settings, and then Advanced. And then the option to close the books is at the top of the page. In QuickBooks Desktop, go to the File menu and select Preferences from the drop-down list. Then choose Accounting from the choices and you will see where to set the cutoff date and enter the password. When using QuickBooks Desktop, consider condensing your data files using the utilities in the program. As the data file increases in size, performance can slow down. It is recommended that you condense your files starting with the books 4 years prior to the most current complete year. So when 2019 is closed, you would condense 2015 and earlier. Condensing the file reduces individual transactions to summary journal entries by account and period. This significantly reduces data file size. If you ever do need the detailed transaction from condensed periods, you have the archive backups discussed earlier. Lastly, consider destroying paper documents that have passed their retention requirements. Our website has a one-page record retention guidelines PDF at jrcpa.com/forms-guides. Another important year-end task is issuing 1099s. Businesses are required to file 1099 MIS forms whenever payments totaling $600 or more in a year are paid to unincorporated independent contractors by check, direct deposit, or cash. Preparing the setup and maintenance of the 1099 subroutine in your accounting software during the year will save you time and prevent unneeded stress at the year end. We have prepared a separate webinar series specifically targeting the processing of 1099s. Although the initial setup requires significant effort, if properly maintained, the processing of 1099s each year will become simpler and less costly. The webinar will cover such items as qualifications and obtaining the correct taxpayer identification number using W-9s. You can find these videos on the Jones and Roth website for detailed instructions on preparing to file Forms 1099. In Oregon, personal property tax returns are required to be filed by March 15th each year. Similar to the 1099s, after the initial return and setup, the annual preparation of your company's personal property tax returns will generally only require minor revisions. Preparing them in-house is simplified and much more cost-saving than having an outside service prepare them. You will determine at the end of the year the inventory on your fixed assets by each location. You will also prepare a list of current year additions and current year disposals. Disposals of assets are assets that are no longer of value and have been removed from the property. Again, it is important to note that any property that is no longer used, whether because of obsolescence or because it is broken, needs to be disposed of or sold and removed from your property list, or it remains taxable. Simply placing it in a storage area will not remove it from being tax eligible. We have a video tutorial that details the process step by step, available at our website, jrcpa.com. You will want to review and, if needed, revise your employee policies and procedures for the coming year. Both the federal and state governments have been aggressively reviewing and supplementing labor regulations, programs, and taxes. Not staying up to date on current employment laws and regulations can be very risky and possibly quite costly. All right, that wraps up our year-end accounting checklist. This list of best practices that we just went through is meant to guide you through closing your books at the end of your accounting year, so it can be more streamlined and much less stressful. Be sure to watch our other tutorial videos on Forms 1099 and the personal property tax form. Thanks for watching.